If you're married, it's up to $500,000 in tax-free gain. Hey, it's Kevin A. Malsh, Pine Financial Group, where we work together so you succeed. You found us here on Facebook, you found us here on YouTube. Please help me out. Hit like, hit subscribe. We're trying to build a channel so we can help more real estate investors just like you. I am going to start this video by saying I am not a CPA. My office got a little bit upset at me last time when I gave you some tax advice without being qualified to do so. So I want to say be sure to get your own advice from your own CPA. But I do want to share some ideas that I believe are possible when it comes to saving capital gains taxes on your capital gains. So the first one is obviously the 1031. We all hear about it. We're going to shoot some other videos about it. But what is a 1031? So it's a section of the tax code which allows you to sell a property and defer your taxes on any gain. So as long as you roll money from one investment to another, and there's some restrictions around this, but if you're buying another property and you're upgrading and you're buying another property, so it's a like-kind exchange, you can defer taxes and not pay any capital gains tax on that. So number one would be the 1031 exchange. Be sure to learn about that. Number two, the one that sometimes is overlooked, is your primary home. Look, we know that if you lived in a house 2 of the last 5 years, you don't have to pay capital gains tax up to $250,000. If you're married, it's up to $500,000 in tax-free gain. But here's what I think people miss sometimes. One, it's 2 of 5 years. It does not have to be consecutive years. So if you lived in the property for a year, you rented it out for 3 years, you can move back into it for 1 additional year and avoid the capital gain. So it's 2 of 5. They don't need to be consecutive. And then the second thing is you should increase your basis on your primary home if you think your gain is going to go over that 250 or 500,000. So what do I mean here? If you have a basement finish or some other improvement that you did to your property while you live there, be sure to track that, because that's increasing the basis on the house. So whatever you paid for the house plus all your improvements can limit that gain and hopefully keep you under that exemption so you don't pay any taxable gains. So there's 2 little tricks to avoid capital gains taxes. Hopefully you got some value out of this. Hopefully we could help you as a real estate investor. You can find out more at pinefinancialgroup.com.